Traders Corner is brought to you by IG.
Welcome to Traders Corner. As always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. And as we sometimes do, tonight's show is an educational one. And if the name Adam Khan means anything to you, think mystery flash gold supercar owner, it probably indicates that you've heard of or may even be toying with binary options. And there is a fleet of supercars behind you, Garth. I don't think they belong to Adam Khan, but his name has been doing the rounds, and he's been tied with binary options, and that is the subject for discussion this evening.
That's right. He's certainly a sensation on the web at the moment, and he's evidently this South African guy that trades binary options and has made a hell of a lot of money out of it. I'm not buying any of it. Okay,
well, purportedly you made quite a lot of money out of it. Yeah. We've heard rumors to the contrary, but and I must say I'm a total novice. What is a binary option and how do they work?
Yeah, well, since it's so topical, we figured this is a good thing to talk about on this educational show. So a binary option is basically, it's a financial option which the amount or nothing at all. So it's like a red or black. And I've got a few slides here which we'll talk about, and then we can just get into an example of it. But the point to make is it's an all or nothing option, and typically for a binary option is between 0 and 100. Okay. And that's in points, because usually you'll bet on the binary option in terms of points or rands per point. The underlying instruments that will typically, the derivative on which you'd trade a binary option would be anything from indices, commodities, stocks, currencies, etc. Anything with a financial price that moves, there can be a binary option on it. And the expiry for these binary options is usually short-term. It can be hourly, it can be daily, it can be weekly. But usually the most common binary options are very short-term traded. They're often like the daily ones, which expire at the end of a particular day. So you're basically taking a bet on whether the price of an underlying asset underlying instrument will close higher or lower at the end of a set expiry period. And as I said, that expiry period could be anything from an hour to a day to a week. If your price closes higher on the day of, or on the time frame that you're looking at, then the expiry value of your binary option will be 100. If the price of the underlying instrument closes lower, then your expiry value is going to be 0. So you can see that there's two possible outcomes here. Either you're going to find that this option expires with a full 100% of its value, or it's going to expire with nothing, 0. So it's, like I said, it's all or nothing. It's very much like a game of red or black, effectively.
Is it less than nothing? So in other words, if you're betting on something and it's all or nothing, I mean, can you actually have a negative return on the binary option?
No, you can't. So the worst that can happen is that your binary option value goes to 0. It can't go negative.
Okay.
So we'll have a look at an example of it now, and I think it'll make a whole lot more sense once we've gotten into the example. The points to make, just the last sort of slide of the theory really, is that you can go long or short on a binary option, and it all depends on whether you're betting on whether the price of the underlying instrument closes higher or lower at the end of that expiry period. So typically what you would look at is you take any instrument and say to yourself, do I believe that it's going to end at the expiry price? Is it going to be higher? Okay. If it's going to end higher, then your binary option will end with a value of 100. If it ends lower, then the value of your binary option will close at 0. And typically, you'll find that when these binary options first list, they trade at a price of about 50, which implies that it's got 50% chance of going up or 50% chance of going down. So an in-the-money binary option will end its expiry point at a price of 100, and an out-the-money binary option will close at a price of 0. And the price in between listing and expiry will trade anywhere between 0 and 100 up until that expiry date.
And sorry to ask a stupid question here, but just if you were shorting something, in other words, you expect it to close lower, and it did close lower, then it would be in the money.
Yes, it would be in the money, and then you would make the maximum that you could on that. So it's best illustrated with an example, I think, because all the theory is great, but let's put it into example terms, and then I think it'll make a whole lot more sense. So IG markets do offer binary options on the SA40 cash. which is one of their products. It's basically the top 40, right? So what I've got on the screen here is a 15-minute chart of the SA40 cash index. And it's particularly, I'm looking at the day of the 5th of September over here in the middle. So what we look at when we first talk about this binary option is we say, what was yesterday's reference price? In this case, the closing level for the top 40 on the 2nd of September, which was the Friday before the 5th of September, the closing level was 46,973. So now that is the reference price for the next day when the binary option gets listed. Then effectively the bet or the binary option looks to say, will the market close the day higher or lower? Right? So the first thing the next morning, and by the way, that yellow shaded area, that's the day that we're going to focus on for now. That's the 5th of September. So your binary option price in the morning, first thing in the morning on the 5th of September, based on the fact that we are looking for the top 40 to close the day higher than 46,973, the spread between the buy and sell on that binary option, first thing in the morning, was 43 to 57.
Okay, where does 57 come from?
Okay, so it's points. And same, 47 is points. You then decide how many rands per point do you. If I'm bullish and I think the market's going to go higher, then I'm going to buy that spread. I'm going to buy at 57, expecting that the market goes higher. If the market does end the day higher, then the binary option will close with a value of 100. If the market, however, goes lower and it ends the day below that reference price, then the binary option is going to end the day with a price of 0. So I can go long or short. If I'm bullish, I'm going to buy that binary option at a price of 57. And I'll say I'm going to bet, for example, 100 Rand per point.
Okay, so that would be the points difference is 14 between 43 and 57, and it's 100 per point. I mean, just as an example.
Yeah, that's it. Exactly. So that's the buy-sell spread. If I believed that the market was going to go lower that day, then I would go 3. And I could also do it in, for example, 100 Rand per point. Okay. So let's just show how the trade follows throughout the day, and then I'll give you the two examples, a bullish example and a bearish example. So it starts the day with that buy-sell spread, as I mentioned. Then you can see that throughout the morning, the market then has this almighty big rally. And then by that stage, you would say, well, looks as if there's a fairly high probability that the market will indeed close the day higher. So notice how the buy-sell spread of your binary option at that point has moved quite a bit higher. Now suddenly it's 78 to 92 is the spread on that binary option. However, later in the afternoon, you get this sharp sell-off, which comes all the way down, and now suddenly the market is in negative territory for the day, notwithstanding the fact that it had a massive rally in the morning. Now the market's sitting in negative territory. Now you would say to yourself, from here, that the market is going to end the day negative. And notice how the buy-sell spread between on your binary option is now 13 to 27. Okay? So you can see how the value of this binary option fluctuates quite significantly throughout the day, depending on the movements in the market. At the end of the day, at 5 p.m. on the 5th of September, eventually the market closed the day at 47,079. Okay, now that number, as you can see, is indeed higher than the 46,973, which was the reference price from the previous day. So what that meant is that this binary option ended the day with a value of 100. Okay, so it expired in the money, effectively. If it had expired out the money, then it would have.
Okay, can I just interject and ask, if you had maybe bought a binary option at the top of the day's trade, so when the market had spiked up, then presumably you're out of the money by the time the market closes. Yes,
that's right. Okay. If you had have bought at that time when the market spiked, you would have bought at 92, okay, which would have meant that you had very little upside anyway, because it could only go from 92 to 100. It can never go higher than 100. And so in that case, if the market had have ended negative, you would have lost 92 times whatever your bet was. Okay, so you wouldn't have really wanted to take that bet. If you had have been brave, you might have wanted to take this bet down here, where you would have bought the binary option at 27 in the expectation that it might close the day at 100, and it did.
Okay, and your gain would be the difference between 100 and 27?
Yes, exactly. Okay. That's correct. So let's look at two examples. Let's first look at a bullish example. So let's assume I come into the morning and I'm bullish for the day, and I think the market's going to close the day higher. then what I would do is I would then buy that binary option at a price of 57, and I would go long with any amount that you want. But let's just use 100 Rand per point as an example. So I'm going long at 100 Rand per point on the decimal there at 57. All right. By the end of the day, notice how that binary option ends the day at a value of 100 because it's expired in the money. So that my profit is the difference between 100 and where I went in, 57. It's 43 points. 43 points times 100 Rand per point. I've made 4,300 Rand as my profit. All right. That's a bullish example. Now, let's assume that I was bearish in the morning. We come into the day, and I'm looking to now sell that binary option because I am of the view that the JSE is going to end the day lower. So I then go short on that binary option. I sell short at a price of 43, and I again do it in 100 Rand per point. Okay. By the end of the day, that binary option has expired in the money, so it's expired with a value of 100. Therefore, my loss is 43 minus 100, which is 57 points. So I've lost 5,700 Rand.
Okay.
Okay. So you can see how it works. Basically, it's red or black. You're saying, is the market going to end the day higher or lower? Those are the only two possible outcomes. And my binary option is either going to end the day with a value of 100 or with a value of nothing. You can do it during the day if you want to. You could have, for example, bought it in the morning and then sold it when the market had spiked up in mid-morning then. Yeah, you can.
And then what would you get for it? So
you'd get the difference. So you would have gone long at 57 and you would have been out at 78. So what's that, 21 points.
And are you always out at the bottom of the range or the bottom of the spread? So what I mean is, so 43 to 57, that was the spread at the start of the day.
Yes.
At the sort of midday, the spread was 78 to 92.
Yeah.
So if you had to cash in there, you'd always take the bottom end of the range.
If you're long, then you would be selling.
Okay.
You would be selling to the bid, because remember, these spreads that I'm showing you, those are the buy-sell prices. So the buy on the left, the sell on the right.
Understood.
And the point to also make here is notice that spread is incredibly wide. You could fly an Airbus A380 through that spread. Okay. It's so wide. And this is where binary options become, to me, a low probability product to trade. And why I don't actually trade them. I did once just to learn how it worked, and that was the last time I ever did it.
Did you lose money, or did you make money?
Yeah, I lost money. And I could see from that moment onwards that this was going to be a losing battle. So I stopped right there and then. If anyone's ever played the game of roulette, you'll know that you've got 37 squares on the wheel, and you spin the wheel and you put the ball in, and the ball will land in one of those little slots. Okay, and there are 36 squares which are either red or black, and then there's a green square which is the 0, and that belongs to the house. So if it lands on 0, the house keeps the takings, and then you can bet however you wish. But I mean, obviously, a common bet is red or black. But that's also probably you're never going to consistently make money if you're betting red or black on roulette. Now, binary options, I suppose, in a sense, are quite similar, because in essence you're betting on a red or black type of outcome.
Yeah.
Okay. However, that spread in between the buy-sell price is where the house. Here on a roulette wheel, you've got 1/37th of the wheel is. Whereas if you actually look at the buy-sell spread on your binary options, it's so wide that your green slot on the wheel probably is like 10/37ths of the wheel. So what I'm saying is that if roulette is a low probability game, then binary options are even lower probability than roulette.
All right, well, I'm taking myself off to the casino. Garth, we'll leave it there. Just a quick reminder that people can subscribe and get a weekly reminder of what's happening on the show. Yeah,
that's right. If you go to traderscorner.co.za, there you can sign up for our free weekly email. There's a link in the middle of the page. Click on that, enter your email address, and then we'll send you one email per week which details what's coming up on the show for that week.
Okay, great. Very interesting show, Garth. Thanks for informing us. Garth McKenzie is a founder and editor of Traders Corner.
Traders Corner is brought to you by IG.